You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back for episode 2 of the bi-weekly options extravaganza, known far and wide as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, around these parts, Options Insider Radio Network. You guys know the drill by now. If you're one of the many on-demand listeners, hey, we love you. All we ask is you keep rating and reviewing. We're seeing more and more of you folks all the freaking time. So keep rating and reviewing wherever you get the show. It's on just about every platform under the sun. Heck, you can walk up to your smart speaker and tell them to stream it now. So that's been around for a while too. YouTube, however you want to get it, wherever you listen to it. If you like what you hear, keep rating and reviewing. It really does help the new folks continue to discover the show. Of course, if you want to go above and beyond, seeing new folks in the pro Q&As and then the pro side all the time as well. If you want to join the party over there, theoptionsinsider.com/pro, or I haven't mentioned it in a while, don't tell anybody, /secret club. You get in there, you kick the tires and light the fires. You join all the fun with the pro Q&As. Even had Uncle Mike in there yesterday. That was pretty fun. And we got Options Oddities coming up tomorrow, a whole bunch of other fun giveaways, live goodies, all sorts of goodness. Theoptionsinsider.com/pro. And let's see what kind of goodies we've got in store for you today and who's joining us to dispense said goodies. First, let us go out to the quiet, the sleepy, the tranquil hamlet known as St. Charles. All of our pro folks, they got a mega dose of Uncle Mike yesterday. For the rest of you, you've been jonesing. You've been waiting for more Uncle Mike since Monday. Here he is, Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back, sir. It has been a long time since you and I have chatted. Years.
Less than 24 hours. It's exciting to be back.
So we can view it in two ways: years or less than 20. I did a lot of living in that 24 hours.
It sounds like it. You had one heck of a night last night, Mark.
Going crazy. Lots of living packed into one evening here. And also a guy who likes to pack a lot of living into his myriad vacations. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, who in the third or fourth vacation I lost track of that he's taken now, he has completely forgotten how to work all of his technology here. So let's see if we got him here. Mr. Rock Lobster, welcome back to the show. Are you there, sir? Can you hear me?
I can. I think I figured out how this technology works.
Yes, this technology thing. Kind of central to what we do here.
I played golf. I rested, relaxed. I got a little sun. And I'm back in Maine is actually a little stormy looking. I have to admit, little August dust up. In the rain department could be coming.
Could you perhaps say dark and stormy on the shores of Maine? Could you perhaps say that?
Dark and stormy would be, I think that would work. That would be an apt moniker for the shores of Maine.
There we go. We have brought it to fruition once again. Let's hop into our next segment. For the weather gods change their mind, it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show we break down what the heck is trading, what is lighting up our tape out here. And, since our last episode on Monday, the kind of byword for the markets has been up. It's been pretty much straight up. We are coming into showtime now. We saw a strong day yesterday. And now coming on the heels of that, it seemed like we were going to have a pretty strong day. Today, we have, of course, PPI numbers and other inflation metrics out there that are maybe giving people a little bit of hope that the world is not ending, at least not tomorrow. So we saw the markets really shooting out of the gate today, S&P in particular. Remember, not too long ago, going the other way, going down this direction, when we broke through 4,200, it seemed like 4,200 was just this insurmountable barrier. The S&P kept bouncing off of it and bouncing off of it, and nothing could break it. And when it finally broke 4,200, it was, look out below. And now here we are back north of 4,200 again. And the market seemed like it was feeling its oats, coming into this morning, launching out of the gate again, got up to almost 4,260, 4,257 in the S&P before giving it right back up and dropping right back. Not back to 4,200 again, right around 4,220. And we're kind of hanging out around 4,229 right now. Though actually, we were looking mixed. We were looking firmly green. Then we actually got mixed. The NASDAQ was kind of red for a little bit. As we're kicking off the show now, we're seeing the NASDAQ has ticked green again, but ever so slightly, only about 0.04% to the green. S&P and Dow both up about 0.5%, so still obviously strong days, but maybe trying to find their footing now that all this rally kind of taken a lot of people by maybe surprise at just the aggressive nature of it. Disney coming out with decent numbers out there. I was just down at the parks. I saw them. The parks were freaking crowded, so people are popping into the parks. That's probably how I got the vid. Even though we were wearing masks everywhere, we were kind of the only ones. I blame that long line for Rise of the Resistance. People behind us coughing up a storm with no freaking masks. But hey, I digress. Let's move away from that. Instead, let's get out to the vol surface here and what we're seeing out here from a vol product perspective. Coming into showtime, we got VIX hanging out right a little bit north of 20, about 20.2. It was down about 1.5 points from where it was this time on Monday. Of course, if you're watching the markets yesterday, the rally, we actually got below 20 ever so briefly. Got down to about 1960. Let's see how low do we get? 1959 to be precise, listeners, yesterday. And everyone was like, oh, here we go. This is it. We broke in 20. And now back up north of it again. VVIX at about a 91, up about 4 points from where it was this time last week. VXX, 21.3, down about 0.6 of a point from last show. UVXY, about 9.25, down about 0.6 of a point as well. SVIX, 1370, up about a little over half a point, about 0.55 or so. SVIX, of course, the inverse product. UVIX, 9.25, down 0.75 of a point. They got to be coming for this with the reverse split soon. They don't tend to like it get much lower than 9, it seems like, before they bring the big guns back in. We'll see when that announcement's coming. And then VolQ, 2430, down about 1.3 points from where it was this time last week. All right, a lot of table setting here. Let's go around the horn, see what's lighting up everybody's tape. Mr. Rock Lobster, this is the portion of the program where we break down what is lighting up our tape and what is catching our eye in the markets today. So if you understand that, then perhaps you could deliver said goods to us.
Am I in the goods? Excuse me, my nose.
Uh-oh. The vid striking back at you too.
Well, I probably got it again, but since I've already had it, I don't care. From a vol point of view, what's funny is all of the many things that caused the market to kind of jump off a cliff earlier in the year are all still with us. And
that's my favorite part of all of this. A lot of the macro hasn't really changed, but we're just rallying.
The Russians are still in Ukraine, and there's no guaranteed, although everybody is getting out of Russian gas. So I guess for the Russians, long term, that might have not been the best strategy for their gas sales. Because now everybody knows that the Russians will just cut it off whenever they feel like. So that card has now been played. So maybe long-term Vlad might be a loser on that one, but he's not out of Ukraine. And all I know is we keep sending money to them, right? So that one's not over. Inflation is still with us. Like, we still have inflation. Producer prices, even going up, didn't seem to matter to the market very much. It just was like, I think there's just a lot of talk about inflation peaking, and the market's basically like, okay, which means what? The Fed's just going to keep raising 50 or 75 basis points a month until it goes away. Like historically, that's kind of what they've done in the past. Now, I don't know about you, but I don't see how, I hope the government got, a lot of their long-term bond sales, hopefully were at really low rates, because they're not going to be able to borrow at 4, 5, 6% if that's the case. But they probably have a few months to do that. Also, like massive government spending was also part of this inflation, supply, whatever, however you want to call it. Definitely too much money was coming out of the government. Just Google Milton Friedman for all the listeners who don't understand what inflation is or where it comes from. And yet we passed another bill that spends money. So I don't think it's not like the government has slowed down the spending. Okay. And then they're giving the chip industry $250 billion. Like, I don't know where that money's coming from. So none of that stuff, like supply chains, maybe some of it's easing, but ask anybody who has grocery shopped in the last year and tell me if your prices has gone down and supply is back to normal. And I'm going to say, no way. I don't see how anybody could possibly say that. Go out to dinner. How much? The prices in Chicago, and I was there in June, were unbelievable for dining out. Like, oh my gosh. So, I think those things are still with us. Plus labor costs are through the roof. Anyway, so none of those things have gotten better. However, the market just basically came back to where it was when everybody was worried about those things. When everybody's like, oh my gosh, these could be a disaster, right? So generally, when you're trading and you remember, Mark, you used to price things based on, kind of how you decide what you think, basically the range of the underlying is, right? So the S&P 500, maybe that 3,700 or 3,500 or some of the dire predictions, at least for now, didn't come true. The Russian thing didn't, there was no crazy scarcity. Prices went up really fast, and that got people's brains, and that's why you have to let the pricing mechanism work, right? So nothing really has been solved, in my view. Now you have the midterm elections coming up, so gosh knows what kind of madness is going to come out of that. So none of these things have been solved. Volatility is basically back to where it was, almost the exact level. If you look at a chart in VIX, the vol level is nearly exactly the same as it was right before the Fed started their aggressive rate policy hike. So now that the market knows what it is, it's no longer a surprise. Traders can price it in, and we can price in a lot of, and stocks and a lot of earnings were very, I would say, poor as businesses adjust to like, oh, wow, we have inflation. Like, what the heck are we going to do? So I think basically it's mostly like, after a while you get punched in the face enough, you either get numb to it or you pass out. And that's kind of, I think, where the equity market is. So from a vol point of view, we have a steep contango again in VIX. So short-term volatility is now lower just because the market's not moving as much, except for like kind of the massive update we had yesterday. Again, all the volatility or most of the big vol moves for this year have been on the upside, not the downside, which in the past, in my book, has always been the Fed. It's always a Fed thing, a Fed meddling, Fed stepping on the gas pedal, Fed, doing this, doing that, whatever, to get equity holders a little more excited and the algos more excited. So, maybe they translated Biden's press conference when he said there was zero. What was it? CPI index was, I don't remember the exact parsing of it. But it did ignore the fact that inflation is still up over year. And it's not actually coming down yet. It's just not going up faster. So I'm not quite sure how that'll work out. But the algos must have read it because they're still sending stocks up. And volatility literally down right to that level. So it's amazing how traders can bring that right back. And that's kind of where we are right now. So the way I view this, though, is I'm kind of feeling like it was peak inflation, to be quite honest. Hopefully, if the government doesn't screw things up, which they can. But as of right now, they didn't do anything silly with like gas rationing and stuff like that. Like some of the more silly policies really haven't happened. They went for their out of their playbook, which is spend more money and hope we can pay it back later, which generally stocks like. So I would just say from this point of view right now, we have to get past some of these issues. I think we have to get past, but we're literally right back at the spot where we were in mid-April. And from here, we have to just see where it goes. But it's not going to surprise me. I called for the Prince 1999 volatility 2 weeks ago on vol views. We didn't quite get there last week, but we did touch it this week. So I still think it has a strong chance of happening by vol views tomorrow.
You're looking good yesterday. I think the party was probably in full effect over there in the Giovinazzi compound until we rallied back above 20. And I don't know about you, Mr. Rocklops. I'm not sure what your economics textbooks told you or taught you back in the primordial ooze days when you were in college. But that's how you fight inflation. You throw more fuel on the fire. You spend more, and then the fire burns so hot it burns out. Isn't that what you learned? I learned that.
Yeah, yes, something like that, I believe. Something like that. That Milton Friedman textbook I probably read. I think something. He said something.
You got to skip to the end. You got to go to the appendices. That's where you find the real info there, the real nuggets. You just burn out all the fuel, and then there's nothing left to inflate, and then you're done. Then you're good. All right. Let's go around. Everyone's freaking out now because Wall Street Journal just tweeted that NASDAQ's in a bull market. Everyone's going nuts about that. So all sorts of fun going on there. Mr. Uncle Mike, sir, a lot going on for you, the Perma Bull. What is lighting up your tape out there today, sir?
Well, Andrew's just a negative Nelly today, isn't he?
Well, he went on vacation and he got some sunshine and some relaxation and he came back reinvigorated. And for him, that means even more dour and gloomy than ever.
Got it. Well, I have full faith in the United States government. I have full faith we'll pay all of our bills. Or wait, no, I was just kidding on all that stuff. But anyway, yeah, I mean, Andrew raises a lot of good points in that with where we are right now, not a lot is different from where we were back when we started this rally a few weeks ago. And so in looking at this, we were as low as the 3,700 level approximately. We've gone up over 500 points in the SPX, which is a huge rally for the time with which we've had in less than a month. That's over a 10% rally in a month. But the thing with which we need to look at is that we live in a different time from the time when business and government was separate. And what I mean by that is that, like it or not, the big business is here to stay. We know that. But the U.S. government is dependent on the companies like the Googles, the Amazons, and all the big tech and just big companies in general to provide jobs for our country. And so because of that, they give them favorable tax rates. And so that's where the big debate comes in. How come those evil corporate people don't pay their fair share in taxes? Well, if they were forced to pay their fair share in taxes, they'd go to a country that wouldn't make them pay their fair share in taxes, or whatever way you want to look at it. And we would not have those companies here to provide jobs. So with that being said, it's like this fine line of where do we go? What do we do? Where does the tax burden get placed on? Well, if you try and place it on the workers, there's a lot more workers than there are corporations. And if you place the tax burden onto the workers, then workers aren't going to vote for politicians and they'll never get voted into office. And so from there, the only choice to where you'll have all of these huge government programs with which we have large corporations in the country providing jobs and have low tax rates, the only way that can possibly happen is to continue to borrow more money and kick the can down the road. Now, this has been happening for years and years and years and years in our country. That's just the way it is. And so because of that, we have huge deficits. And with the deficits with which we have, it's kind of come to a point to where the government and business are kind of partnered with one another because they both kind of need each other. The corporations need the government to provide better tax rates, and the government needs the corporations to provide jobs and a way of life for people. And so from there, we live in the political world with which we live to where we just simply borrow more money and kick the can down the road. Now, I'm sure every politician is totally on the up and up with how they look at the money and how they spend the money. And there's no all those things about pork deals for the certain congressmen's districts and things like that. I'm sure none of that ever exists, because if that existed, then we'd have a problem, let me tell you. But in the economic system with which we have to continue to borrow money and kick the can down the road. Now, as an American, does that make me fearful? In some ways, yes. But what makes me rest easy at night is that we can continue to borrow money and continue to essentially refinance our debt because we're the big kid at the playground and we run the show. And if other countries don't like it, then we can stop our military support to them, and we can do a lot of things with that. So because we are who we are in the world, we can get away with that. And that's just kind of the way with which it is. So because of that, we have a lot of inflation issues. What shocks me to no end is over the last 20 years, how the small amount of inflation with which we've had. So in my opinion, the inflation that we've had, and that's just become an issue so much in 2022, yes, we did put $1 bajillion worth of money into the market with all the COVID checks and things like that over the course of 2020, and we'd had a lot of spending, and the government does spend a lot. But the other part of this that a lot of politicians don't want to talk to is that on a lesser scale, we've been pumping money into our economy for a long time. I believe the last surplus year that we've had in our budget, I think, was 1969 in the Nixon administration, if I remember correctly from my history class. So we've been deficit spending for many years. And when you do that for a longer period of time, we did beat inflation back in the early 80s. A lot of people debate that it was started with Gerald Ford's campaign of whip inflation now, but inflation became less of a thing in the 80s. Now, with that being said, we're still pumping money into our economy. We still have all this big government spending. At some point, you're going to have to take your medicine, and you're going to have to see the side effect of all of that. And with all of the COVID-free money that was handed out, I kind of think that was just the end of what could be a perfect storm, meaning that, yes, we've been doing this for many years, but we did a lot of it. And combine that with the war in Ukraine, supply chain issues, and all the other things. Yeah, that was part of it. But I really believe the cause for this inflation is many years of the government doing what they do. And what they do is what I just described. Now, what's happening here is that the market's very excited about the fact that we're not having the CPI numbers. We're not having the numbers this week that everyone was afraid of. And that's caused a big rally in the stock market. And so because of that, that's cause for excitement. Now, if the government and big corporations continue with this partnership that they have, which is what we now know as American capitalism, if they can continue with that, work together, and continue to kick the can down the road, so to speak, then the corporations will be happy because they'll have good profits. The government will be happy because jobs exist in America. And markets will likely go higher. And so when we have that working in sync over time, things go higher. What's happened over the course of this year, we've had a minor pullback compared to the major rally with which we have had. So I think we're just in a minor pullback so long as we continue to print money and no one seems to complain about it. Besides people like us that complain about it, no one cares, it seems, then I think we will continue to have a successful American economy, and it will continue to go further. The other things that I'm seeing in the more shorter term, we're selling off a little bit in the bond world, so we are getting a little bit of a flight to risk. Yesterday, we had a big rally in the 10-year early in the morning when the CPI number came out, and that kind of fizzled out throughout the day. And so right now, I just think that we're kind of sitting in this one spot right now in the 10-year note, in that where we are, bondholders know what's going to happen with the Fed raising rates, or they've kind of accepted it. And so the sharp decline is kind of stopped for now. And we're back to more normalcy in the 10-year note. And by normalcy, I mean boredom for people that are watching it. So we have that. We are above the 4,200 mark in the S&P. We've talked about that a lot on this show. We closed above it yesterday, and today we're continuing to go higher with it. So it'll be interesting to see if we can hold that mark. And I believe that is everything that I am seeing for today. Back to you, Mark.
Thank you for that, Mr. Uncle. Let's get on out now to what the market has given us today. What's going on and all this up and down and now up again, and what's happening? Wall Street Journal says we're in a bull market just because we're up over the last few weeks or so. So all sorts of madness going on out there. Inflation is clearly transitory. That's what we've all learned from this little experiment. Let's get on out now to what the markets are giving us. Start with the big dog. Let's go to VIX first. 211,000 contracts. So not that big today for the big dog out there today. The ADV 434. So I guess if you look at it in light of that extremely compressed ADV, then it looks like it's doing all right. Might have a good chance of hitting that pretty anemic number today. SPY 3.8 million, actually 3.81 million right now. So that's looking pretty robust. The ADV a little bit shy of 6.5, about 6.45 million. So SPY certainly seems on pace to hit its ADV again today. The S, not playing around today. 1.56 million contracts on the tape for the S. The ADV 2.1 million. So it certainly seems like the S is on a rocket ship from a volume perspective today. Small cap, same deal. 736,000 contracts on the tape right now for IWM. The ADV is only 705. By the way, small caps up nearly a full % right now. So a lot to unpack. We'll get into those more a little bit later today on TWIFO. Hopefully you enjoyed Joan Rivers' day last Friday because she's back, a.k.a. the once and future and now present Dr. Vix, joining me on TWIFO, Mr. Russell Rhodes, in a little bit. So stay tuned for that, all you live folks. We'll get it right after this show. You on-demand folks, it'll come when it hits the network. Let's see. Q's 1.7 million contracts on the tape. The ADV a little bit shy of 2.5, about 2.45 million. Let's get out to the single names, see what's lighting it up. And, we have a couple barometers for what indicates a pretty active day. And one of those is if we're over 300,000 in our top 10 most actives that day. That's a pretty active day. And we are right there, listeners. 304,000 contracts is what it cost you to break into the top 10 today. That's nothing to sneeze at. We're looking at days sub 150 not too long ago. So pretty active day. That gets us all the way to Google, a.k.a. Alphabet, out there today. Haven't seen them in the top 10 in a little bit. They're good for 304,000 contracts today. Alphabet's kind of unched off slightly on the day today. It's not a big movement day, at least net for them. They were up earlier. They were a little bit shy of 120, about 119.70 right now. They got up to 121, about actually 121.50 today. So they were looking a little higher, giving that back up now. Number 9, we got our old friend. Is it a meme name again? I don't know. It's looking like it's Ford. 319,000 contracts, up another 32 cents today, or 2.1%, threatening $16 now. Man, Ford on the rampage these days. Listen, man, those 12 puts that I was wearing not too long ago, looking pretty good now. So gotta like that one. You got to take the wins when you can get them, listeners. 319,000 contracts, good for number 9. Number 8, the artist formerly known as Facebook. I hate to say Meta, but c'est la vie. Ticker symbol is Meta. That's good for 419. Number 8, we're already at 419, listeners. That's nothing to sneeze at. Meta also had quite the run today. It's 178 and about a half right now. Up, kind of unched on the day, actually. It's up 0.06. But it hit 182.95. Actually broke 183 ever so briefly, 183.10 earlier this morning. So this one was feeling its oats as well. Now they're kind of coming for it a little bit. So a tale of two very different markets just in the first half of the session today, which is kind of fascinating. Also why we're seeing so much paper on the tape. Then we get to number 7 and 6. The symbol twins are back, listeners. First off, we've got our old friend, frequent offender, AMD, usually good for number 4. Today, number 7, 478,000 contracts. AMD up nearly $0.50, which is about 0.5%. It's right around $100 in AMD, 99.5 right now. And then followed right behind it, hot on its heels, is reigning king of the apes right now, which is AMC, 513,000. So good to see the Symbol Twins back out there today. AMC on fire, up at 25.44, up about 1 3/4. Got as high as 26.08 today. So quite the love for everyone's favorite movie theater chain / gold miner. Number 5, we got the Amazonians out there today. Let's see how they're looking today. I know our buddy, the Flowmaster, when he was on his pro Q&A, said he wasn't impressed with the volume numbers coming out of Amazon, given their 20-for-1 split. He expected more, but you know what? They're doing some decent paper today. 579,000 contracts on the tape for Amazon. Amazon off a buck right now, about 0.75%. Let's see, they've had looks like about a $2.80 range today, so they've been whipping around a wee bit as well. Number 4, a name that's been making some headlines today. I was just talking about them earlier. I was down at those parks. It was Disney. Those parks, a key driver of their strong numbers. Also, Disney Plus. Everyone's kind of washed their hands of streaming after Netflix's abysmal numbers a few quarters ago. But Disney Plus showing they can make some money on it. So 119 right now, up $6.50 or 5.7. It was below 100 not too long ago here in Disney. So a nice recovery for them. 90.25 was actually their low. Let's see. How high did they get to? They got up to 123 and about a quarter. So they have come for this one recently now as well. So we'll see. I know there's still some clouds hanging over that whole Bob Chapek. He just faced a vote of no confidence not too long ago, barely survived it. So I know he's not exactly the most popular guy in the C-suite over there. So we'll see. Maybe these numbers will prolong his tenure a little bit. Number 3, NVIDIA, 614,000 contracts. Good for number 3. Number 2, it's the fruit company. Let's see what's going on with them out there today. Listeners, Apple, 893,000 contracts on the tape. Apple kind of unched today as well, 169 and about a quarter. They got as high as almost 171, 170.99, and then right back down. They're within spitting distance of their 52-week high again, their all-time high, 182.94. So Apple looking strong out there. Hey, inflation, it's all transitory, listeners. And then number 1, our old friend, it's the Tesla out here. 870.25 right now, off about nearly $13 or about 1.5%. It's got up to 894 today, 894 3/4, and then looks like it bounced off the low of 864.25. So about a $30 range so far on the day today. Good for 980,000. Nothing quite at the 1 million. I'm sure maybe if I re-racked these now while I was talking, we might be at the 1 million number, but 980,000 contracts on the tape for AMD. Let's get on out here really quickly to some earnings, and we got to get to the odd block. Hot week for earnings. Palantir on Monday, Coinbase, Roblox, and Wynn Resorts on Tuesday, Jack in the Box yesterday, Wendy's, Fox, and the old Diz and Bumble. What's going on with the ladies? I guess we'll find out what their numbers are. We did find out. Thursday, today, we got Six Flags Rivian. What's left of that dumpster fire? Canada Goose Holdings. Going to come back to that one maybe a little bit today as well. Let's see. You got the numbers updated, hot off the presses from our friends over there at Orats right now. Disney before the bell, 108.13 is where they were. I think you got, wow, actually they didn't. I thought they were going to blow the doors off their report, but they did not. They were pricing in 6%. They delivered 3.8%. Now, obviously, it depends on your holding period, listeners. If you hold on to it a little bit longer, they have obviously moved a little bit more than that. We kind of measure just the initial kind of earnings impact from these reports. If you hold on to it now, they're up 5.6%. So they have pretty much come in line with their straddle, but wow, surprising results. And of course, where they were yesterday, they're up 10 points from there. So it's a fair amount of juice. Six Flags today before the bell, 24.40 is where they were trading. They're pricing in 10.3%. So a lot of juice, listeners. They delivered 6.1%. And then Canada Goose today before the bell as well, $20.50. They were pricing in 12.9%. They delivered 5.5%. So underperformance appears to be the name of the game. Let's get out to the ladies really quickly as well. Bumble yesterday after the bell, 35.08 is where they went into their announcement. They were pricing in 12.6%. They delivered, get this, listeners, 1.3%. So apparently not much juice in the ladies' love sector today. Today, now they're off about 6%. So catching up a little bit there. But wow, intriguing stuff. Underperformance across the board. I got Rivian coming up after the bell today really quickly. They're at $36.70 as of this report. They're pricing in $4.06. In the past, they moved $4.38. So kind of right in line. You know, Rivian was kind of a key driver in that massive rally in Ford and then the big sell-off in Ford. Let's see what's going on out there. We got Walmart and Home Depot after the bell. Actually, coming up before the bell next week, so we can come up to those next week. We got to keep on rolling, listeners. Really quickly, for the season right now, we're hovering at about 112%. So week 1, 90%. That got revised down. That was 105% when we started. Week 2, 96%. So week 1 and week 2 now in the red. Week 3, 118%. Week 4 on fire, 140%. That all averages out to 112% right now. So still far above our average of 86% for a cycle, which has pretty much been the average since the start of the pandemic. Meanwhile, though, listen, by the way, really quickly, we got some trades going up as well. A whole bunch of new trades being exited today in Bumble and Disney, and trades being entered in ILMN and XPOF and RMD and Ryan and a whole bunch of others. Check out the earnings trades report if you want to know more about those. 88 long straddles on the table right now, listeners, and 62 long calendars. As we keep on rolling, it is time to unleash the beast. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. Some might say we get whimsical. Let's find out what the Eye of Sauron has flagged for us today. First, I think no surprise here, we're going out to the old Diz. Walt Disney really quickly, because we got to get on it. We got to get into it now. 118 3/4 right now. It's off $59 on the year, obviously, but they've had quite the resurgence over the last just about a month. They were $95. Actually, 90. They hit their low of 90 1/4 back about exactly a month ago, a little less than that, July 14th. And now since then, they've had quite the resurgence, up 27% over the course of the past month. So quite the pop for them. We saw, first off, our Eye of Sauron came back with a covered call on Disney out to December, 5,000 of the Dees 140s for 317. Didn't hate this one. Someone was dumping these. If it gets up to 140, I think a lot of people would dump it there. That's about 2.6% through December. I didn't hate this one. This was about a 30 vol, which is kind of about what you expect for Disney. They're not a meme name going to give you a 200 vol. This one we didn't hate, but as we were looking at that, it came back with another one. This might be one of my favorites. It's definitely my favorite trade of today. And one of my favorite trades of a while, just because we haven't seen one of these go up for size in a big name in quite some time. Maybe in a little bit in some crazy tiny little meme name, but not in Disney. We got an Iron Condor going up for size today in Disney. And that always puts a smile on my face, listeners. It was the October 90, 110, 115, 130 Iron Condor. So, of course, Iron Condor listeners, 4 legs. You got this one up, by the way, 3,304 times. So this is no small trade. Looks like they were selling the Condor. So they were selling the guts and then buying the wings to protect themselves against a crazy adverse movement. It's like they sold the 110 puts for $230 and then bought the 90 puts against it for 40 cents. So they did that for $1.90. And then they came back in and sold the 115 calls. So they're not playing. These are in the money calls. They sold these for nearly $11, $10.95. Again, kind of crushing the bid. And then going through the offer for the calls, they paid $355 for the 130s. So that whole Iron Condor nets out to a credit of $9.30. If you're wondering, this is about a 30 vol as well, depending on the leg. Some are a little more, a little bit less, but they look like they're around 30. Obviously, the puts are going to be the most. The 90 puts are a 42 vol, and they bought those. So intriguing stuff. Mr. Rock Lobster, if you have any thoughts on the on the covered call, have at it. But more interestingly, more scintillatingly for our audience, size Iron Condor in Disney. When's the last time we saw something like that, sir?
I can't remember the last time. To be good. So that's 2.7 million in premium. Is that right?
It's not a small trade, sir. That is for sure.
Yeah, it's pretty solid. They're getting $9 for that. It's not a terrible one. It is a bit of a fade. It feels like though, right? Because where's Disney? Is it up one? Oh yeah, it's 119, and they're selling the 15. So it's
aggressive.
It's kind of an aggressive.
It's an aggressive level. And those 115s, I was kind of scratching my chin on those as well. I was like, 115, really? Okay, interesting.
Yeah. So I mean, they're going like, it almost. I don't know what. I'm not going to say it has the feeling of a buy right, but they are selling a more aggressive in the money call. Maybe try to get rid of the deltas on the, the put spread. I think really it's a bet on vol going down, and with the Disney earnings, if you kind of parse it, they had great theme park attendance, right? Because basically, like, put it this way: if you're going to a theme park and wearing a mask, everybody's going to a theme park and wearing a mask. So, like, that part is great, but that is not a growth business for Disney, right? Like, theme parks are like it definitely is a cash generator for them, but it's not a growth generator. And it seems like their streaming service has been clipped a little bit. So, like, the way this Iron Condor sets up to me is kind of more like a fade on the earnings and the fact that, the multiple that Disney has right now. I mean, the stock was $200. I think at one point it was so right now $4 versus 100 is like a 25x at least earnings multiple. So I think this is it's an Iron Condor that's definitely fading this earnings move, and I don't think it's actually a bad trade. It's a pretty manageable trade. And they're like, okay, or anyway, so I don't think it's that bad, but I think it is fading the move. But the theme park business, yeah, I think everybody, like, every plane is full that I went on. I mean, I was on 4 flights. Of course, I missed my connection because there was flight issues or something like that. And I had to once again fly into Burlington, Vermont to get home from my vacation. Second time in 2 months. The only 2 times I've flown in 2 years. So, I mean, people are getting out and about, no doubt about that, right? But that's what I think this is a kind of, there's definitely a fade on the earnings. And they're taking in like 30 volatility for Disney. I would say that probably isn't a bad level. Like under normal circumstances, like a 30 vol is probably not too bad. It is the low tick for vol over the last 6 months. But I bet you if we go out 1 year, yeah. So, like, usually Disney probably hovers in the low 20s for volatility. So, I mean, I think this is kind of to what Tusaw says or said. I think people we're getting by this inflation thing and whatever. The market's back to where it was. And the next thing to go is probably maybe volatility back into the mid-teens. And I think this trade is definitely more a fade on that whole thing. So fade on the earnings and fade on the vol.
Yeah, it's intriguing. I like the credit. I like the term. Not in love with the strikes. That 110 put, you can be buying the stock there. Obviously, you get $9 worth of cushion, so you're getting stopped out more around a 101 level. But still intriguing. I just love seeing a size Iron Condor. You don't very rarely see these, let alone in Disney right after earnings. So intriguing stuff. What do you guys think of this one, listeners? Would you rather sell it? Would you rather buy it? Are you guys still into Iron Condors? Now, you guys loved on our recent poll a couple weeks ago. You guys were all over Iron Condors, which kind of surprised me. So maybe they are making a bit of a resurgence these days. Let's go out. Speaking of resurgence, is it meme stock resurgence, listeners? Our next name might be another candidate to maybe add a little bit of fuel to that fire. This is another newcomer. This is Pure Cycle Technologies, ticker symbol PCT, out of Orlando, Florida, talking about the theme parks out there. This name, ticker symbol PCT, trading about $9.50, up about 20 cents or about 2% today on the year. A year ago, they were trading about almost $16, $15.94, and they sold off hard in January. They got down to their low for the year, Jan 28th, of $4.94. Since then, they've pretty much doubled, listeners. So nice little run for them since then. So intriguing kind of tale of 2 years for them. The first half of the year, they got crushed. Second half, now they're looking pretty good. And it looks like someone, Mr. Rock Lobster, is thinking the party is going to continue. Someone coming and scooping up 4,000 of the AUG 10s for 47.5 cents. So getting some splits there. They were pretty wide, 30 cents at 50. But again, it's not Apple. So you kind of expect a market like that. So first off, they're buying calls. That's optimistic. They're pretty near dated calls. So that's also very meme stock characteristic. The IV is a 130. Now we're looking very memey out there. And this is right before earnings. They have earnings tomorrow. So this is a huge flyer on the old earnings. By the way, the stock was $9.26 when they bought these. It's $9.46 now. So they're already passing the first Rock Lobster sniff test, which is they're looking a little bit better right now. Mr. Rock Lobster, it has the whiff of a meme trade about it. What do you think about these calls in August in PCT, sir?
Well, it has the right name, Pure Cycle Technology. I mean, that has all the hallmarks of a meme name, a meme name extraordinaire. Revenue 0, market cap 1.5 billion. It looks like this company got spun out of Procter and Gamble. So basically, they probably had some technology for recycling.
They recycle plastic, apparently, which is a laudable thing, a good thing.
I guess they haven't quite made it happen yet. So they don't have any reported revenue yet, but I guess they're kind of just, okay, they're going to recycle. And they return the feedstock to near virgin condition. Oh, wow. So basically they're consuming polypropylene waste. I don't think polypropylene waste is plastic bags, but it could be. So I would say, so this stock has, it's been around for, wow. Okay. It's been around since April 2021. It looks like it IPO'd around $30. So they launched it when all the green energy stuff was looking great. And so it looks like it has promising technology. And again, spun out, like, okay, P&G developed it and they probably couldn't do anything with it in-house. So they spun the company out and raised some money. Again, it's like the value is, it's like a lotto ticket basically, but interesting that, something can happen. So I think it's one, actually, I'm just putting it on my list.
I was just doing the same thing. I'm just marking this one as one I got to pay attention to now. Yeah, this is interesting. Obviously, we have infinite plastic, so they have a huge market to address.
Well, yeah, and by the way, I think this is great. Anything that, if they could take, black bags and junk and all that kind of stuff and actually find a way to make it into if they can make epoxy out of it, or I think that is obviously a positive thing. So interesting. It's probably worth checking out. That the stock is down around, it was a $35 stock. And this is pretty close to about the bottom for it. It didn't get a whole lot. $5.50. So this year, yeah. So so this has benefited from the, I think the Inflation Reduction Act. Is that passed or not yet? I can't quite keep track of what's going on with it, but anyway, this would definitely be a beneficiary of that for that. So interesting. These calls, I think they're running out of time unless there's going to be quite a big earnings surprise. So it's possible, but it's definitely a roll of the dice.
We'll find out tomorrow. We'll find out tomorrow if the lottery ticket, if these scratchers are going to work out. But yeah, this is an intriguing name. I need to dig into them a little bit more. I think we all hope selfishly that they do gangbusters because we're all choking on plastic in our daily lives. So something that could be some sort of solution to that is a good thing. But yeah, this name, whether they make no money, whether these calls are going to work out, maybe a bit of a different story. What do you folks think, listeners? You high on Pure? Looks like our chat is getting into them as well. This name sounds cool. I'm going to look into them, says Options Queen. Yeah, we're with you. I think we're all kind of intrigued by this one. Maybe a candidate for oddities. Maybe they'll be in our fun trading section of the show pretty soon as we keep on rolling. We got Canada Goose puts, but we're kind of coming up against it. So we'll pay those off, I think, on Monday's show, because now it is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, just looking at our chat really quick. A lot of people excited that size Iron Condors are going up. I'm with you. People also excited about this Pure Cycle name. They want to check them out. Yeah, I'm with you there as well. They're also trying to figure out this rally. What the hell's driving it? Yeah, I'm with you on all three of those. I think we're simpatico on all three of those issues. Speaking of the issues of the day, we have put two of them to you right now. They are hot and heavy right now over there at Options is the place to go to make your voice heard. First, we asked you, beginning of the week, vol has many different causes. However, which of the following factors do you feel is the primary driver of the current volatility environment? Gave you 3 choices and then the infamous other. Earnings season, the Fed, Ukraine, or other. If you pick other, we want you to say what your other is. That's what's interesting about it. You just choose other, then it's not as interesting. So try to explain yourself if you can. It even says it. Explain yourself there. And then our other question, a rare double question of the week, listeners. That's how crazy this week is. It's because I remember on Monday's show, we were all debating, looking at all the paper. We were just talking about this pure cycle. There's a lot of that kind of paper coming back now. Crazy, near-dated, optimistic, triple-digit call paper, which is kind of reminiscent of what we saw this time last year. And it's in a lot of names we've heard of, like GameStop and AMC and Vroom and BBig and all these names. So we asked you guys after Monday's show, is the meme stock frenzy back? Simple one for that one, yes or no. Uncle Mike, we'll go to you first. You can take them in any order you want. First off, you think our audience is choosing that the meme stock is back or no? And then B, what do you think they're voting for the primary driver of the current vol environment, earnings season, the Fed, Ukraine, or others?
I'll say Fed for the driver of the current environment. And then in terms of the meme stocks, I think the audience thinks they're back. I think they're kind of back, but they're really not back, meaning that there's a little bit of interest, but I don't see the follow through on it that we once had.
Wow, Uncle Mike, usually the ray of optimism. He's the party pooper today, playing the rock lobster role here on the show today. Throwing water, cold water, on all you hot meme kids out there. All right, Mr. Rock Lobster, I expect that from you. What do you think is driving the vol this time? Is it earnings, Fed, Ukraine, or other? And if you have an other, what is it? And then also, you think our audience is saying the meme stock frenzy is back? Yes or no, sir?
I would say, yeah, the Fed. This is ridiculous. All the vol is from the Fed at this point. And is the meme stock craze back? I'm going to say no. I'd say that generally those things happen for about a year and a half, and then they're dead until the next generation of new investors comes around, which will be probably in another 10 years. So it happens every 10 years. Say I've been doing this for 30-something years, and this is probably the third or fourth frenzy I've seen. So there'll be a fifth, but I think the meme stock thing is dead for a little bit.
Wow, 2 for 2 throwing cold water on the meme kids. First, let's go out to the vol drivers. Our audience agrees with both of you guys. It's the Fed, 65.2% choosing the Fed. 21.7% saying other. Hey, we need your others. What are your others? I want to see what these others are. I'm intrigued. What are your others? 8.7% saying earnings season. No love for earnings. Until yesterday, there was no votes for Ukraine. Now only 4.3%. So some of you vote Ukraine. Ukraine was a big driver earlier in the session. I have a hard time feeling it is nothing now, but intriguing how you guys are shaping up. You got about a day left on that one. And then the big dog right now that everyone's sinking their teeth into, the meme stock frenzy. You guys are overwhelmingly saying the meme stock frenzy is back. 71.9% of you saying yes. 28.1% of you saying no. Probably a little bit of hopium maybe in there. You're kind of hoping this frenzy is back because those are kind of heady days for all of us, right? But intriguing stuff. You got about a day left on that one as well before our questions of the week expire. So if you're listening on the on-demand side, you can get in there, make your voices heard at Options. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, Uncle Mike, what you got in store for us until Monday's episode, sir?
Are we going to hold 4,200? That's what I'm watching, along with all the other crazy world events. And I would say 4,200 is the main thing I'm looking at right now for Around the Block.
The answer is no. We won't hold it. I'll give you the answer early. Cheat sheet, Mr. Uncle Mike. 3,600 by Monday's show.
Wow!
Wow!
And you said the Rock Lobster was doom and gloom.
In a crazy town, madness, dogs and cats living together, mass hysteria. Mr. Rock Lobster, sir, talk me off my ledge. What are you keeping an eye on until Monday's show?
Yeah, I think this 4,200. I mean, this morning I thought 4,300. Why not? Why can't everybody get giddy? But apparently that was the kiss of death. So I would like to see if volatility, if vol could go a little lower. Right now, we've got a 20 vol, so they got around $180 straddle for the SPX. So again, I think expectation. How much upside do we have? I can't see a ton. That doesn't mean anything, but I think we need some actual news to come out now. We're sort of back to that level, so I think really what I want to see is if some of that back end vol, which is still pretty pricey, comes down a little bit, and there's actually real sellers of it. So I don't think that has materialized quite yet. Back end of volatility is still, longer term stuff is still pretty expensive, it looks like. So you've got a March volatility, that future's 28%. So it's still up there, and I'd like to see it come down a little bit before I get super excited.
Who are you kidding? You're never super excited out there. Unfortunately, listeners, that music means we have come to the end of our sojourn here through the option block. But don't worry. If you need more in your lives, we got you covered. I'll be back in a little bit here with the once and future Dr. Vix, a.k.a. Mr. Russell Rose, to break down the world of volatility on the futures options side of the fence. What's going to make it onto the show this week? You got to tune in to find out. Every week is different. Every TWIFO, a unique snowflake. By the way, coming in the end of the show, NASDAQ ticking a little bit into the red again. S&P up about 0.4%. Dow still up about 0.5%. So market coming off a little bit, but still kind of where it was when we started the show out there. Let's go on the horn again really quickly. Mr. Uncle Mike, sir, if folks want to reach out to you, check out all the content you're putting out. Where should they go? What should they do?
Follow me on Twitter at Mike Tusaw, TOSAW. If you want to contact me directly, go to my website, stcharleswealth.com.
And Mr. Rock Lobster, same question for you. If they want to reach out to Ted, where do they go? What do they do?
Yeah, call Ted, 888-TRADE-01. Check out my products. I'm at 6 at Option Pit. Oh, my gosh. Trading and teaching every day of the week. Still doing it after 10 years as Option Pit just keeps growing at an exponential rate. Crazy. It's crazy, but we love it. What the heck?
It is quite literally crazy, listeners. You want to check out the madness for yourselves, optionpit.com. Got Option God in the chat saying, I haven't done an Iron Condor yet. Well, we think we can fix that for you, Mr. Option God. So keep listening to our shows. We'll lure you to the dark side here. Speaking of you live folks, hang out, relax. We'll be back in a little bit with the once and future Dr. Vix talking TWIFO. And then for all of you on-demand folks, we're back again tomorrow, live noon Central, 1 p.m. Eastern for Volatility Views. Should be a fun one. A lot of vol to unpack out there. And then after that, for all you pro cats, with Options Oddities, and then back again next Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.